In August 2005, a company went public on the New York Stock Exchange. 8 weeks later, it was bankrupt. That's one of the fastest IPO-to-collapse timelines in Wall Street history, and the fraud behind it had been sitting there the entire time. The company was Refco, one of the world's largest futures and commodities brokerages. It processed trades for hedge funds, corporations, and individual investors across the globe, and by the mid-2000s, it looked like a genuine Wall Street success story. Big enough, established enough, that in August 2005, it launched an initial public offering that raised over $500 million and instantly valued the company at more than $3 billion. Investors who bought into that IPO had no idea they were buying into a company whose own chief executive was actively hiding hundreds of millions of dollars in bad debt from them in real time as the deal was closing. Refco's CEO was a man named Philip Bennett. For years, reportedly stretching back well over a decade before the IPO, Refco's trading operations had accumulated bad debts from customers who couldn't pay what they owed. These weren't small, isolated losses. Some stemmed from a major Refco customer that collapsed in the late 1990s, leaving debts that Refco effectively absorbed rather than reported. Rather than write those losses off and report them honestly, Bennett allegedly orchestrated a scheme to move the bad debt off Refco's own books entirely, shifting it into a separate entity that he personally controlled. The mechanism was almost embarrassingly simple once investigators unpacked it. Around each reporting period, Bennett's entity would essentially absorb Refco's uncollectible debt, making Refco's own balance sheet look clean and healthy. Then, once the reporting period closed, the debt would effectively move back. Auditors and regulators reviewing snapshots of the company's finances at any single point in time would see a firm with manageable, collectible receivables, never realizing that the actual bad debt, believed to total around $430 million, was simply being shuffled out of view right before anyone looked. This wasn't a scheme that ran for a few months and got caught. By most accounts, some version of this shell game had been running for close to a decade. Through multiple years of audited financial statements, through a 2004 private equity investment from Thomas H. Lee Partners that valued the company in the billions, and straight through the due diligence process of a $500 million public stock offering. Every layer of scrutiny that's supposed to exist specifically to catch this kind of fraud, auditors, underwriters, institutional investors doing their own diligence, looked at Refco's books during that IPO process and didn't catch what had apparently been hidden there for years. Part of what made it so hard to catch was structural. Refco operated through a tangle of subsidiaries, regulated and unregulated, domestic and offshore, and the debt shuffling scheme relied on moving obligations between entities that weren't all subject to the same reporting requirements. A regulated broker-dealer subsidiary might look pristine on paper precisely because the mess had been temporarily parked somewhere regulators weren't looking as closely. The unraveling happened astonishingly fast once it started. In October 2005, just weeks after Refco's stock began trading publicly, the company disclosed that it had discovered a $430 million receivable owed to Refco by an entity that turned out to be controlled by Bennett himself. In plain terms, the company's own CEO owed it an enormous, previously undisclosed debt, tied directly to the concealment scheme. The stock, which had traded as high as the high $20 range after the IPO, collapsed within days. Refco suspended Bennett, then fired him. Trading in the stock was halted. Clients who had money parked with Refco's brokerage arms scrambled to pull funds out before things got worse, which only accelerated the crisis. A classic run on the institution dynamic, where the fear of collapse becomes part of what causes it. Barely 2 weeks after the disclosure, Refco filed for Chapter 11 bankruptcy, becoming, at the time, one of the largest bankruptcy filings in U.S. history, just 8 weeks after its triumphant IPO. Bennett was arrested and later pleaded guilty to multiple counts of securities fraud, wire fraud, and money laundering. He was ultimately sentenced to 16 years in federal prison, one of the longest sentences ever handed down in a case like this, reflecting both the scale of the deception and how directly it had been aimed at defrauding public shareholders through the IPO itself. Several other Refco executives faced their own criminal charges, and the company's outside law firm, along with some of the underwriting banks, faced civil lawsuits from investors who argued the due diligence process should have caught what Bennett was hiding. What makes Refco such a striking case study isn't just the size of the hidden debt, it's the timeline. Most of the collapses covered on this channel take years to fully unwind after they're discovered, as investigators piece together what happened across a slow-motion disaster. Refco went from a celebrated Wall Street IPO to complete bankruptcy in under 2 months because the fraud wasn't a slow leak. It was a bomb that had already been fully assembled for years, just waiting for one document, one disclosure, to finally set it off. It's also a sharp reminder of how much a successful IPO can obscure. Going public is often treated as validation, proof that a company survived intense scrutiny from underwriters, auditors, and sophisticated institutional buyers, all of whom are financially motivated to find problems before the deal closes, not after. Refco proves that validation can be an illusion if the fraud is built specifically to survive a snapshot-in-time review, shuffled just out of frame every time someone official actually looks, and that the very structure designed to inspire investor confidence can become the mechanism that delays discovery the longest. Get the scripts, tools, and everything else behind this channel. Link in the description below.